Hey guys, I've got start a basis. Maybe just before I jump into the analysis, I'll give a brief overview of what I'm trying to achieve for this channel, and I'm hoping this is going to be a collaborative channel. I'm basically trying to share some analysis from my experience. So, just to give a quick overview of myself, I spent my early years out of university as an investment banker. I sort of got experience to working on various kinds of M&A deals. I've worked on some IPOs, so I have a pretty decent understanding, I would say, on how to sort of do some financial analysis, look at assets, and all that kind of stuff. I'm by no means claiming I have expertise in any of the businesses that I'm going to be discussing over my videos that I'm going to be posting, but all to say I've got at least some experience from my investment banking days. And then after my investment banking days, since then, I've been spending my time in private equity. So I work at a pretty large private equity firm. And that's kind of my background. I'm not going to sort of give some details away because I want to keep myself a bit anonymous for now, at least. So that's kind of a bit about myself, just to add some credibility to the stuff that I'm going to be sharing with you guys on these videos. But essentially here what I've got is some analysis that I did on two things. The first piece being just to get a macro level view on where I think Bitcoin prices can go to. Again, this is a very simplistic analysis. By no means is this meant to be the most exhaustive analysis in the world. I think from experience, like if I was taking this to investment committees at a large private equity firm or an investment firm, there would be certainly some follow-on analysis that would have to be done. But I think this just gives you a quick framework on what to think about, and also just a general idea, if you can believe certain key inputs, what that could mean in terms of investment return from Bitcoin, but also from a Microstrategy perspective. I'm going to be diving into Microstrategy and what the returns look like there. So here I've sort of laid out the analysis. I think the first piece of the analysis that I did is just a market share analysis of Bitcoin. So just looking at the amount of total assets that are in the world. So here, when you look at the 450 trillion, that's supposed to be trillion. So that's $450 trillion. That's the total amount of assets that exist in the world in US dollar terms. And then of those $450 trillion of assets, 250 trillion of that sits in investments. And then the remaining $200 million is sitting in cash. Off that $250 trillion, about 18 million is sitting in gold. And then the remaining 231 trillion sits in non-gold investments. So that could be stock market, infrastructure, whatever else. And then at the bottom here is the total Bitcoin Bitcoin in the market. So that's about $2 trillion. So Bitcoin is about $2 trillion currently. So we can see as a percentage of total assets, that is about 0.4%. And then as a percentage of total invested assets, that's about 0.8%. And to be clear, this 2 trillion is calculated based on the current price of $100,000 per Bitcoin. And this 19.9 trillion is the amount of Bitcoin that exists today. So I've assumed essentially in this analysis that by, I think the year is 2140, we should have all the Bitcoin mined. That's kind of the number or the year that I got when I was Googling online. So that's kind of the growth rate assumption here for how the amount of Bitcoin is going to grow. And then here I've got a couple other points that I've added in just for context. So like if Bitcoin was $500,000 a coin today, what that would mean what that would say Bitcoin is as a percentage of total assets and invested assets. So if Bitcoin was actually, if we go to the $1 million per coin, so if Bitcoin today went to $1 million per coin, that would mean Bitcoin would be probably pretty similar to gold as a percentage of total assets or invested assets if it was the same, because then it would probably be about the $18 trillion mark itself, and so it'd be very much in line. So if today Bitcoin were to move in line as a percentage of investment relative to gold, without money flowing out of gold, so perhaps some more of the cash flows into Bitcoin, that would imply Bitcoin could go to $1 million a share, $1 million a coin today. but I've kind of used this as sort of just a sanity check to some extent to see, if my assumption on how quickly Bitcoin grows is reasonable, given, what total assets and total invested assets look like. But I've basically assumed here that total assets keep growing at 3%, just a high level assumptions. I've assumed that most of the money flows into investments, and I've taken a view that gold grows at 4% a year as well. Could be some other way, and like, I'm happy to share this model with you guys. You guys can switch it around. If you guys are interested in the model, you guys can just shoot me a message, subscribe and shoot me a message, and I'll be happy to share this Excel file with you. You guys can toggle in your own assumptions. It's a very simple model and see what you guys believe. But anyways, these are kind of some of my assumptions. And then I've assumed that Bitcoin itself, right here, the price per Bitcoin grows at a 25% CAGR. Is kind of what I've assumed. I think we've heard Michael Saylor say it's going to be more like 40%, but I was like, okay, I'll do 25%, and let's see what that gets me. But if we do 25%, we can see by the end here, Bitcoin gets to about 8% as a percentage of total assets and 13% total invested assets. So it actually outgrows almost not double, but like 70% or whatever higher than what gold would be as a percentage of assets and invested assets. Although from a dollar perspective, I'm not saying that dollars are flowing necessarily out of gold, because gold itself is still growing. It's primarily like cash is not growing as quickly. Cash is only growing at 1.5%. So I'm saying, like, if more of the cash that comes out just starts flowing incrementally more into Bitcoin, that's kind of what this is telling me. So I don't feel too bad about it. I think it's probably okay. Like 8% is not that crazy, and like, you could make the case that, as Michael Saylor says, like, gold's gonna really come down. So you could see maybe this going down much more quicker, and that maybe helps it get to 8% or 13% versus it coming out of cash or other investments. But you can have your take anyways. But this is just sort of, if I believe the 25% CAGR, that's where it sort of gets me to. Ignore the coloring. I don't think it says too much. I did some conditional formatting just to see what it says. Green is supposed to be pretty good, very achievable. Yellow maybe a little bit more challenging, and then the redder it gets, it's supposed to be more challenging. So based on my coloring, what it says is the 8% and the 13% is a bit more challenging. But I don't know. I don't think it puts too much weight, because it's just relative to where it stands today. So obviously 8% seems hard when currently it's only 0.4%, but I don't know if it's really actually hard. So I wouldn't put too much weight on the coloring. All to say, my current analysis is assuming BTC, Bitcoin price, grows at 25% CAGR, and basically, if it grows at a 25% CAGR, and based on all these other assumptions I've made on the remaining assets and the total assets, that means that Bitcoin's going to be about 8% of total assets or 13% of total invested assets at a price of $2.8 million a coin. So that's kind of what this is telling me, and I'm like, okay, fine, let's believe that. Down here is where we get into the meat of it, and where we get into the meat of the MicroStrategy analysis. So what I've done over here is I have broken up the valuation of MicroStrategy into basically two components. The first component is the existing coins, the existing Bitcoins that MicroStrategy currently has on their balance sheet. So they have 450,000 Bitcoins sitting on their balance sheet. I think that's what it is as of the year end 2024. You can plus and minus 2,000 or 3,000, whatever. Like, this is a high level analysis. I think it's directionally correct. So whatever, I've used the $450,000 Bitcoin number, and I've applied, and so the first piece is the value of the reserve. So as the price of Bitcoin appreciates, the value of these coins is going to increase, and that obviously is going to be a net benefit to the shareholder. And so what I've done over here is I have taken a view of, what the cash flows are being generated if we were to DCF the valuation. Essentially, that's what I'm trying to do over here. So what I've done here is, if we take the cash flows as the value increases. So here we've got, at $100,000 a coin, the value of 450,000 bitcoins is $45 billion. If the price increases to $150,000, that means the value is now $67.5 billion. And the delta between the two is 22.5. So I've assumed that that's my cash flow for that year. And then if price in 2027 goes up to 180K, the delta between the value last year versus the value now is going to be the cash flow that year. And that's kind of how I've assumed the cash flow builds up. The alternative view is you could say, well, like there is no value because I'm not actually getting that cash that year. The very pessimistic view is that there's no value appreciation any single year, and then it just finally jumps up in the terminal year to $1.3 million, or sorry, $2.9 million, and then I get $1.3 trillion of cash flow in year 2040. And so the first approach is I discount the cash flows at a 50% discount rate. So I put a pretty fat discount rate, and I discounted those cash flows based on sort of the periodic cash flow approach, which is my first approach. And then second approach is if I take sort of the non-periodic cash flows, just taking cash flows from like just assuming that all the price increase occurs in the final year and there's no value in any of the other years. That's the present value. Obviously very stark difference because it's a pretty big discount rate and it's a very long timeline. So it's 2040 is what we're talking. So it's pretty delayed. So very two different, very significant valuation given given the differences in approach. And the reason I think this is the right way to do it is because if I have $45 billion of Bitcoin today and somebody wants to buy it out, like I do want to get compensated a bit for the upside that still exists in that asset class, because I still think there is some appreciation. So if somebody wants to buy out my $45 billion of Bitcoin, which is a lot of Bitcoin, I do expect some sort of a premium. And so I think like here you can see the premium is essentially this minus what it is today. So like a $46 billion premium under approach 1, right? And then in the other case, it's more like a $3 billion premium. Like that's kind of how I'm getting to this. It's probably somewhere in the middle, but that's kind of the approach over here. The second piece of MicroStrategy, and sort of this piece that Michael Saylor always goes off about, is how they're generating this Bitcoin yield, which is they're increasing the amount of Bitcoin that exists on a per share basis by taking advantage of the financing. So they're basically raising dollars, buying Bitcoin, and the value of Bitcoin is going to appreciate quite a lot. So this Bitcoin yield is attractive because they're raising debt, like essentially debt like instruments through like the convertible note or accretive equity issuances to do. It's almost like doing very accretive M&A, but in this case the M&A is buying Bitcoin. So they're raising attractive financing in order to increase the amount of Bitcoin on a per common share basis. So I think last year they generated like a Bitcoin yield like 47%. So I was like, okay, let's assume in 2025 they generate a Bitcoin yield of 30%. So that would mean that a 30% Bitcoin yield would mean that if they currently have 450,000 Bitcoins on the balance sheet, 30% of that, like a 30% yield would mean that for those same shares, they now have an incremental 135,000 Bitcoins on like for those exact same shares. So they got another 135,000 Bitcoin essentially. That's what the 30% yield would imply. And then here on every year, I basically assume the yield goes from 30% to 27.5% to 10%, and it just drops down to the 10% level essentially. And I think like Michael Saylor would probably say, oh, this is too it's too conservative. He would probably say it's much higher. But so I was like, okay, let's say it just drops down to 10%. Again, this is a very high level analysis. It's not like I've read all the annual reports or gone through, some really detailed amount of work. This is just high level, just basically building a model around a simple model on how I would look at MicroStrategy group. So here I'm like, okay, let's say Bitcoin yield, last year was 47%, it goes to 30%, drops to 27.5%, and then just drops to 10%. That's kind of what it is. And then I've already sort of mentioned this, but I've assumed that BTC price growth is 25%. Obviously, I've got some variation here just to add some volatility to the game, and then I've just normalized it to 25% in the latter years. Just to explain the math over here, so this is a waterfall. So we add 135,000 coins in year 2025 through the BTC yield that we generate, basically through raising debt in order to buy more Bitcoin. And then I've assumed that in the following year it would be 161,000 because that's a 27.5% yield on the existing base of coins that is going to be there after we've got the 135,000 added. So once we include the 135,000 with the 450, you've got the 585,000 balance. So this just tracks the total balance, and then based off the total coin balance, it implies what the yield would imply in terms of new shares that have been added. And then here what it does is this evaluates the value of the yield. So the value of the yield is the amount of shares you added times what the price of Bitcoin is at that point. So if you added 135,000 coins and each of them is worth $100,000, that's sort of the value you generated. That yield then sort of keeps creating value as the price appreciates. So like these 135,000 coins that you bought gave you $13.5 billion of value in the year 2025. But then in the following year, because the price of that Bitcoin went up, you created some more. So that the value of those 135,000 coins is now $20 billion. And then down here, you can see what I've done is similar to how I did the periodic cash flow approach above. This kind of does the periodic benefit. So, it was 13.5 billion. Those 35,000 coins were worth 13.5 billion. Then in the following year, they were worth $20.3 billion because the price appreciated. Well, technically, I created 13.5 billion in 2025, and then I created about 7 billion more of value in 2026. And then here you can kind of see this is just the incremental value you created as the price appreciates. Same thing happening for sort of every single year. And then here you've got the total periodic cash flow. So you can see it basically is a waterfall from all the years of yield that you've generated. And then same thing. And then what I've done over here is because these trading functionalities, like the ability to raise this debt, like essentially lever up and buy more Bitcoin, this thing is going to keep creating some value. So I'm like, okay, we got to have some terminal value approach to it. So I applied like a 10 times multiple to the yield that was generated in the final year. So I'm like, okay, like let's give them 10 more years of credit of generating the same dollar value of yield. Essentially is what the math says over here. And then here, if you take all those cash flows from the periodic term plus the terminal cash flow, and you discount that all back under approach 1, you get $147 billion value for this treasury operations business. And then present value 2 approach is if we assume that all this value, same as I did for when I was valuing the reserve, if you assume that all this value comes sort of in the final year, and because technically you're not selling and getting the cash right then and there from an equity holder perspective, if you just get it all at the exit, then what's the value for it? And obviously, very, very, very big delta. Again, I've applied a 50% discount rate on all these periodic cash flows. Then what I've done over here at the bottom is if we take all this, combine it together, what does it mean in terms of share price for MicroStrategy? And so what I've done over here is approach 1. This is the approach of using the periodic cash flows. Approach 2, again, is where I assume everything comes in the final terminal year. So here we've got A1, which is the value of the reserve today, which is $45 billion. That is the 450,000 coins times the $100,000 per coin share price today. Then we've got the value of the price appreciation. This is, remember, the $47 billion we had up here, which is the $91 billion. This minus the $45 billion, that's the 47. And basically adding that into the valuation, this right here, and then value of the ARB, which is this right here, the present value of the treasury operations. So total value of 238 billion. And then the shares outstanding, because so the shares outstanding is 285 million. I think I've actually sort of added way more than I needed to, but this is basically the current fully diluted, roughly the current fully diluted shares that MicroStrategy has on its balance sheet. So assuming all the converts convert into shares, this is the amount of shares they have. And I don't think this has to be increased, because what I did in my analysis is I assumed BTC yield on this current base. So all to say, like, it is fully inclusive. It's fully inclusive. And the current share price would be about $838 under this approach. Under approach 2, where I discounted more heavily because I pushed everything back to the terminal year, the value is much smaller. So under that approach, the current share price should be about $280. And if you average in this column, the average of approaches column. So currently, I think the shares are trading somewhere around 350, 360, something like that, close to 400. But I think based on this approach, the shares are still undervalued. They're probably worth somewhere closer to 500. So I don't feel bad about the current share price, all to say, to buy in. And again, like, I think there's a lot of upside. I've discounted stuff at like 50%, all that kind of stuff. Then what I've done over here, this I think is kind of cool, is basically I've used approach number 1, so using the periodic cash flow approach, and I've valued the shares at various time points. And this is obviously, this column is exactly this column. But then here I've taken sort of the periodic cash flows up until from 2026 onwards, and been like, okay, if we get to that point, what does the share price look like? Just to show you, as the years go, what your potential upside could look like. So here, we can see what the share price results would be in the future years as this keeps happening. This is all good and everything, great numbers. I think we're all super excited if we can, make any of these numbers. To be honest, it would be a pretty good return for all of us. I've basically given away that I'm invested in MicroStrategy with all that, and I should probably have noted that up front. Just to be completely honest, yes, I have some money invested in MicroStrategy, so I really hope to do well. But with that, so here what I've done, and the bottom is just compared like how this yield mechanism really creates a lot of value, because essentially you can see here the outperformance of holding it in MicroStrategy versus holding it in just straight Bitcoin. You can see like it significantly outperforms, and this is also part of the reason why MicroStrategy does trade at some premium. Like, it is truly outperforming through that leverage, which is creating this BTC yield. If you 6x your money, if Bitcoin went to like $600 a coin, you would 6x your money. But if you had it in MicroStrategy, based on all these yield assumptions that I have intrinsically built into this model, you 20x your money. So it's absolutely insane if it can do anything like that. You can toggle around the assumptions, you can believe what you want. But I thought this was a kind of a neat model just to sort of look into it and just logically break it into parts. And with that, I would say I'm obviously excited about this investment. I think it's really good. And we all know, the downside is really well protected because the debt just has to be paid back in shares. So you just will, you'll just get mad. Like, if everything collapsed, everybody just gets mad diluted. But if the price of Bitcoin just randomly pops up again, everybody's right back in the game again. So the downside is not bankruptcy. The downside is it goes very far down, but it still exists. And then you just, so the worst case is not a bankruptcy, which means that you have an option call almost that never dies in a way. So anyways, I find that interesting. I find it asymmetric because there is certainly a lot of upside if Bitcoin keeps trending up because it gives you outsized returns versus Bitcoin due to the yield that it can generate because of the ability for MicroStrategy to use the financial markets to raise money to buy more Bitcoin makes it attractive because if you invest directly in Bitcoin, like it's very hard to lever up just to buy Bitcoin. I know some people can. You can borrow against your house or whatever you want to do, but MicroStrategy just has a very attractive vehicle to do it. Obviously, much cheaper than us um, because of the conversion rights and stuff that it can offer. That can be a whole separate video going through why they can do what they can do. But the point is, like, it's a very attractive structure, and based on this analysis, it's just it just really puts into perspective the powerful outsized returns that MicroStrategy can generate. Um, so that's kind of it. That's kind of the analysis. As I said from the start, like I'm by no means saying that this is a fully conclusive, perfect analysis, but just like a high level perspective to see, breaking it into some components and taking a look at it and trying to piece together like why how MicroStrategy works, but also um, how the returns could shape up. And you can toggle around price and stuff and see where your shares may be worth. But anyways, happy to obviously take input. Like you guys should leave comments. There's obviously stuff that I have missed. There may be stuff that I'm not thinking about correctly, but I do like getting people's perspectives. But overall, that's kind of where it is, and hopefully this was helpful. And as I said previously, I think if you guys want access to this Excel, I'm more than happy to share it with you guys. Just subscribe to my channel and shoot me a message, and I'll send it over to you guys. But yeah, that's kind of it. And appreciate you fellas looking into this, and this is awesome. Thank you.